because then what would you not want to see for coinsurance? Like a percentage?
Yeah,
next
like
to it
you
or
might
something?
see 80 or 90% coinsurance. You won't, and you don't see coinsurance waived or agreed amount anywhere else on the proposal, which means then that coinsurance applies.
Yeah, so basically any percentage next to coinsurance, ask for something,
Exactly.
maybe an update on your quote, get it waived or agreed amount. I'm Drew Breneman, and this is the Rise and Invest podcast. I bought my first 2 properties as a 19-year-old with my own money that I earned from an online business I started in high school. I've now grown my portfolio from that first duplex to hundreds of millions of dollars of investment property. My goal with this show is to give you the resource I wanted when I first started out. Subscribe to our podcast where I break down real-life stories, tactics, strategies, and current market information you need to be a successful investor. All right, welcome back, everybody. Tom Panos, commercial insurance broker with BKS, an insurance brokerage firm, is on the podcast today. Tom consults and sells all types of commercial insurance products. His firm specializes in protecting the assets of commercial real estate owners. I'm using Tom and BKS for all my buildings and operating businesses, so I wanted to bring him on here and shoot an insurance podcast. Thanks for being on.
Great to be here, Drew. I really appreciate this. I think we'll have some fun talking about insurance.
Yeah, it will be. I mean, something, when you get going, buying property, it's something that maybe you don't have any experience with or nervous about. So just want to get on here and kind of, hear what you do for property owners and do kind of like a insurance 101 podcast.
Perfect. Sounds great.
Cool. Well, yeah, why don't we just jump right in? So what do you do today for real estate investors?
Yeah, basically we do risk mitigation and risk transfer. So really what an insurance policy is you're transferring your risk for a possible loss to the insurance carrier. And that in simple terms is what an insurance policy does. And that's what we do.
Okay, nice. Great. Well, yeah. So then I guess, first of all, for people that are, just listening or watching, we're both in Chicago. But then you only write insurance in Chicago, or what do you cover in terms of the where this isn't just a Chicago podcast? That's kind of what I want to point out.
We're a national broker. We're probably the 15th largest, I believe, now in the country. So we have offices in all states, and we're licensed in all states. So I do real estate all over. I have clients in Arizona, Texas, Florida, Oklahoma, Colorado, and of course a lot here in Chicago and Illinois.
Yeah.
Sure.
And some of my buildings in Minnesota too.
Oh yeah, that's right. I didn't even mention Minnesota. Yeah, for sure.
Yeah.
Yep.
So nice. So yeah, why don't we just start kind of with the basics? So then, where do you want to start in terms of coverage?
We'll talk about the standard coverages you would buy, and then we could maybe talk about some optional coverages too. But standard is property, and so what's property coverage? That's the actual physical structure, the building itself. And so we ensure that's a replacement cost. And sometimes there's confusion in the markets because somebody says, listen, I bought an asset for $1 million. Why is replacement cost $2.5 million, or vice versa? I bought it for $6 million. Why is it $2.5 million? I always say the relationship between market value and the replacement cost is zero. There's no relationship. Replacement cost is what it costs to reconstruct that building. So if the whole place burns down, God forbid, then what is it going to cost to reconstruct? And that's really the replacement cost. And the way we calculate it, there's a couple of algorithms or software out there called CoreLogic or MSB, Marshall Swift Bach. And we put in the parameters, the square footage, the year built, the construction, number of stories, number of buildings, and kind of spits out a number that is the replacement cost using current data as far as what costs are. And we know, today we have some costs that are rising. So we're trying to, when we're renewing policies, going back and looking at some of those values to make sure we're insuring to value.
Right. So just kind of to back up, so the first sort of coverage, so as a real estate owner, investor, you'd buy it's a policy on the building, cover the physical structure.
Correct.
And then, right. And we've talked about this plenty because there'll be deals where we're paying, above what the insurable, replacement cost is. And, I wasn't in this deal, but I know someone who bought an office building for like $2 million and it costs $6 million to build.
Right.
So I'm not sure what the insurance, bill is on that, but it's probably more than your average $2 million building.
Sure.
So with that being an over market value potentially.
Yep.
But nice. So you buy a policy that's on the building. So I always call it the underlying policy. What's the actual term for that, though.
Yeah, that's just what we call the standard, or it is the underlying if we're talking about excess, but just the standard, we call it business owners or commercial package policy. And that includes a property. And then we also want to talk about liability. So property is the actual physical structure, as I mentioned. Liability is like what I say, it's bodily injury or property damage that you've caused.
Yep.
So your typical slip and fall. So somebody's on your premises, they get injured, that's bodily injury. And so that's what liability. So those two together are the standard, you know. If you buy nothing else, at least have that on your building, covers the structure and covers if somebody sues you for some sort of negligence or being injured on your premise. And that's, again, a business owner's bot policy or a commercial package.
Yeah. And so how I've always thought of that in my head is we have the building and then your general liability. And then the term for general liability, what we're using for that?
Just general liability. Yeah. It's and they're usually included together. So a commercial package is putting a bunch of coverages together, again, property and liability, or business owners for like a property that's under $5 million in total insured value. Then that would be kind of also fits into that. The business owners is a package that has a bunch of coverages thrown in together kind of thing for smaller type properties. And then you're getting into commercial packages for larger type properties.
Okay, nice. Great. Yeah. And then one thing that I think is interesting on when we're talking about replacement costs, like just if you have an actual loss, I think maybe people aren't sure how that works. I've figured it out by now, but obviously, but for those that wouldn't know, how would it work? So let's say your building is, or you can make up the numbers, but how would it work in terms of with, the replacement cost or actual cash value?
Yeah, good question. And that's also an important point to bring up on replacement costs is we insure your buildings, and I do this with all the people I do business with, is get what's called agreed value or no coinsurance or coinsurance waived. So coinsurance, and it's complicated, I won't try to explain it here, but other than if you're not insured to value when you have a loss, the carrier could penalize you, the coinsurance clause. And then, so for example, if you have a $300,000 roof loss for wind, but you're not insured to value, they could maybe give you only $200,000 for a loss and say you're not insured to value. So that's why we always try to get coinsurance waived, so there's no coinsurance calculation done. Whatever your loss is up to your building limit, they'll pay for. So in this situation, when we don't have that, if you have a $300,000 roof loss, they're going to pay you up to $300,000 to repair the roof, obviously, less the deductible. Yep. So deductible we're typically using for 90% of our people is about $5,000, because beyond that, you're really not saving a lot of money and taking on, again, more of that risk for the deductible if you have a loss, and that sort of thing. So that's really how it's would do on a property loss. On a GL loss, there is no deductible. It's first dollar, so they owe you defense, of course, and indemnification, which means that if there's damages that are due, then they would pay that also.
Yeah, in the GL, that's the liability piece, and
correct.
That's right. You're talking about any defense. So if you got to go to court.
Yeah, if they sue you because they got injured, they're going to assign an attorney. They're going to go to court, and then if it's proven that you were negligent and you injured them somehow, then they're going to pay for those damages.
Yeah. So then that's how it works if you rebuild. What about if you don't rebuild?
Yeah, great question, actually. So they're not just going to write you a check for replacement cost. What the carrier does is they give you what's called actual cash value, or ACV, which is replacement cost minus depreciation. So they will pay you that. And then if you do reconstruct, or as you reconstruct, then they will pay you up to replacement costs. So the actual cash value would maybe be, 50, 70% of replacement cost. Okay. Again, if it's a newer building, the depreciation is going to be less, of course, but if it's an older building, it would be more. So it's something that's calculated by the carrier, but that's what you would get if you had a total loss and you didn't reconstruct.
Yeah, because so building owners, they can take on their tax return a depreciation deduction. This is a different calculation. This is what the carrier calculates it as, what the building is worth at this point. Basically what the new value minus the wear and tear over the years.
Yeah, exactly. What the age of the roof is, and the electrical, and the age of the units, and how much is it's up to date or not up to date. So they do that calculation. So.
Yeah. So then anything else we should talk about with sort of this the property coverage or building limits or anything?
Yeah, I think one of the important things in reconstruction too is something called ordinance or law, and that's where if you do have a total loss, right, and the building you didn't have sprinklers, for example. But new code or ordinance says in this particular municipality, you have to have sprinklers when you reconstruct. The carrier doesn't owe you sprinklers. They only owe you what you had prior to the loss, like for like, as far as replacement. So if you didn't have ordinance or law coverage for increased cost of construction, then you would be out of pocket for the sprinklers because you have to reconstruct the code, of course, to get your permits and so forth. So in this case, if we had ordinance or law coverage C, which is increased cost of construction, they would pay for, that kind of thing, sprinklers, fire alarms, or anything else that's code that you didn't currently have in your building.
Yeah. And then do you typically need to ask your carrier to add your agent to add that, or that's standard?
Yeah, that's something we standardly do because that's what we do as far as real estate and insuring real estate, but not every agent would do that. So definitely something to look for when you're doing that. It's also coming up a lot in lender requirements these days. So if you looked at those, it would definitely be something that comes up from that. So
yeah. And do you think why are you guys doing that as a standard thing? Is it because a lot of the properties in Chicago are older and now you guys got used to that, or it's just in many areas it came up as coverage someone would want to
I think both actually. It's coming up in many areas, and it's like a gap in coverage, if you will, if we don't offer it to you, because if you do have a loss, which inherently it's going to happen, that's why we buy insurance. We don't want you to then go, hey, what the heck? Why don't I have coverage for this? Now I got to come out of pocket $200,000 for this new sprinkler system I have to put in my building. And so we try to give a comprehensive coverage and kind of educate. Like we've talked a lot about insurance. We have many conversations so you understand why we're offering it and why we're doing it. But not everybody does that. But we try, just like the coinsurance thing and getting, that waived and this, we try to do it right. So when you do have a loss, you can sleep at night.
Yeah. It makes total sense. So then for the ordinance coverage, I see that there's, when we talk about it, and I don't know, we don't need to necessarily get into what each of these is, but there's A, B, C
correct
coverage or term used there. Do you have to buy all three at once, or how does that work? What do you actually ask for as a person getting insurance?
Yeah. Definitely all three is what you're going to want at varying levels, depending on what percentage. A, you're always going to want that up to building limit, and B and C, we can talk about limits depending on the size of the building, the lender requirements, and so forth. But all three would be definitely necessary to cover you properly from an ordinance standpoint.
Okay, nice. So then as the person getting the insurance, then you would want to ask about talk about replacement costs potentially. And then a lot of times the lender is involved with that anyways. So then that's a conversation. Coinsurance might come up. Sure. You should ask so coinsurance, what would you want to ask for? Just don't
make sure it's waived, or I get agreed amount or coinsurance waived. That would be something you want to ask for if they're not offering that, but definitely they can do it and they should do it again. So when you have a loss, you're not looking over your shoulder or worrying about a penalty from that standpoint. So always ask for coinsurance, and like you said on the ordinance, ask for all three, A, B, and C, in addition to the other standard coverage they're going to give you, the property and the liability, which we talked about earlier. So.
Yeah, but then with coinsurance, you're asking. You said ask for coinsurance, but actually ask it to be waived.
I'm sorry. Yes.
So then when you're looking at the quote that you get, the 2-page term sheet or whatever quote, a lot of times it'll have coinsurance like as a thing on there, and then you just want to see waived.
Yep. It'll either say waived or it'll say agreed amount, replacement cost agreed amount, which also means waived. So it's shown a couple of different ways on their proposal.
Yeah, I just want to give people like what to actually do. So I get a quote, because then what would you not want to see for coinsurance? Like a percentage?
Yeah, like you might see 80 or 90% coinsurance. So you don't see coinsurance waived or agreed amount anywhere else on their proposal, which means then that coinsurance applies.
Yeah, so basically any percentage next to coinsurance, ask for something.
Exactly.
Maybe an update on your quote, get it waived or agreed amount.
Correct. Perfect.
Okay, nice. Yeah, and then just ordinance, you just sort of ask, or if you say you want it. Let's see what else. There was something else I was going to mention. One thing that at least comes up on some of my deals where we have in, especially in Chicago, where there's units that are below grade. Mm-hmm. What do you recommend for water backup on this policy?
Yeah, good question. It depends on if there are units below grade, we'll get a higher limit. So maybe we'll go to $100,000 or $250,000, depending on the size of the structure. and other ones where the basement or the underground for sewer backup isn't finished. So maybe we do a 25 or 50,000. Again, it depends on the size of the building and whether there's, fixed units down there. Because obviously if we have a sewer backup and you have finished units down there, it's going to be much more expensive on a replacement basis rather than just a concrete basement kind of thing.
Yeah. So then really more that you're just looking to have some coverage on the water backup. And then from there, you need to actually look at your building and think about it.
Correct. Yeah.
Okay.
And I kind of do it seamlessly to my clients because I kind of look at that and know the building and see if there's stuff in the basement. But it's always good as an owner to know what you have in the basement or what's down there, and then looking at your water backup limit to say if it's adequate. If I had a sewer backup or water come into the basement itself, is that limit adequate enough for me to repair what I would need to repair down there?
Right. Yeah, because I think I've gotten either competing quotes or stuff over the years, and then we look at it and it's like, well, there's no ordinance in this, and there's no water backup. That's why I asked what to ask for, because sometimes your base quote will just not have it.
Right.
And
the base quotes typically have no ordinance in them. Some of them might have like a $5,000 water backup, which again typically isn't adequate. So we increase it and then we add the ordinance. But ordinance is not a standard offering in most policies, and you have to add extra for it.
Okay, got it. Yeah, I just want to make sure everyone knows what to ask for.
Sure.
And then what about optional coverages? And I guess maybe I'll start with something on, I've had a general liability umbrella, for basically since I started, where once you get even one property, obviously, or some people have these for just themselves walking around. I mean, I have a personal one, I have ones on the property, but what's an umbrella?
Yep. Umbrella is kind of a bad term I don't like. I like to use excess liability because umbrella, people believe it covers more things and it covers everything. A picture of the umbrella or traveler. So I like to use excess because really all it takes is the underlying limits for liability and workers' comp and auto, just your liability limits. Again, not the property.
Right.
So the property limit's the property limit. The umbrella doesn't touch that. But it increases them. So like yourself, you obviously have multiple properties. $1 million or a $5 million umbrella isn't going to do it for all those properties. So we increase the umbrella to 5 million, 10 million, 25 million, depending on the size of the portfolio and the type of risk. So if you had, if you were like a distributor, for example, and you had 20 trucks on the road every day, your liability is pretty high if you get in an accident and so forth. So we'd want a higher umbrella for that. Same thing, number of units as a real estate investor, the type of units, what we have there. If you have more commercial with that type of risk, then we want to increase the limits. So it depends on what you have. There's no cut and dry formula that says, hey, you have this, you have to have this, umbrella. Because I always tell people I don't have a crystal ball. If you tell me what's going to happen, I'll tell you how much umbrella to buy. I don't know that. So
but then because the way I think of it, and maybe to help explain it would be on a lot of these. Let's say you have a $1 million apartment building, and you a lot of those policies, maybe the most general liability coverage you could buy. If I just had to answer that off the cuff, it'd be probably a 1 million per occurrence, 2 million in aggregate. Is that roughly right? Or
we're gonna have to hire you for insurance because you know the terms and everything. No, it's great.
Okay, but that's then if let's say you wanted 5 million of coverage, then that's when you're getting the excess liability. That's what you're calling it.
Yep.
Yep. I see why you say not umbrella, because it's not boosting up my coverage on the actual building if there's a loss there.
Right.
So then just because I like to put numbers on it, that's how I think about it. So then if you buy a $5 million umbrella and there's one event, you really have 6 million of coverage, right? Under the first
for that one occurrence, correct?
On the property, and then up to
plus
5,
an additional 5 above that, so you have 6. Or for more, what the aggregate part you talked about, for more than one loss in a particular policy period, which is a year, then you have the 5 plus the 2, which is the aggregate, so you have 7.
Yeah, and then actually we should touch on that, because then that would be even on your base. I keep calling it the underline because I have the excess liability. So on the business owners or property, or on the property coverage, when it says 1 million, 2 million, you want to explain that again? Because that I just thought I think it's per occurrence. But you said something with the term, so that's just
so
clarifying.
Good question. So it's either standard general liability. It's been this way for a long time, so that's why excess is becoming more and more important. Obviously, the general liability, the standard commercial general liability limits have been 1 million per occurrence, and 2 million aggregate for more than one occurrence in a policy period. So those limits apply per policy period, which is a year. So if you close on a property on 3/1, your policy period is 3/1/22 to 23, and then those limits apply for that 1 year policy period. And then when you renew, they reset.
Right.
So, and it's on occurrence basis, whatever occurs during that policy period, that's what they pay up to those limits, the 1 million or 2 million. And then again, our excess increases those limits. So if we have an event that happens that that has more than 1 million in damages, you're covered for that.
Right. And then these events, these are, things where you're having a claim on the policy.
Yeah.
Or GL.
Yeah.
Yep.
A general liability claim. So a serious slip and fall, or you have a fire and a bunch of people get injured, and now we have a liability claim in addition to that sort of thing.
Yeah. Got it. Okay. What other stuff might somebody buy? You're a property owner. Let's say you have employees or something. Like, what might you want to buy?
Yeah, good question. Workers' compensation in Illinois is specifically required by law. There's other states like Texas that don't require it, by the way. So you got to know the local jurisdiction, of course.
Interesting.
Yeah, they don't. It's a Wild West.
Yeah, I know. It's not a surprise, I guess, but
Yeah. But in Illinois, if you have employees, you're required to purchase workers' comp. People say, well, what happens if I don't? There's no workers' comp police. There's no, anybody running around and doing that. But if you do have, a loss, then if you have an employee like you do, and one of them gets injured while working for you, and you have no coverage, and then they not only can sue you, but then you can get, in trouble for not having a workers' comp policy. So, and that covers exactly what I said. It's for an employee gets injured while working for you. Obviously, a property manager may have people that work in the office, but we also have maintenance type people and people that work in the field. So, is it likely for the people to get in the office to get injured as much as the field people? Of course not. And so there's different varying rates depending on what people do, what we call classifications. And so the classification for the people in the office, the rate per 100 of payroll is much less than for the people out in the field who are doing work, who could get injured their back or smash their finger or get something in their eye or so forth.
Or
paper cut probably is not going to be a big deal in the office. So.
Yeah. So then what would somebody that's buying workers' comp, what should they be thinking about then?
Just making sure that they're sharing the proper payrolls with their agent, and the limits for workers' comp are pretty standard. So there's nothing there that you need to be concerned about from a limit standpoint. They're kind of in the policy itself. And that you're just, you're also listing states. So if you're a multi-state operation, you have employees in Illinois and Minnesota and Arizona and so forth, we want to make sure that we have the all states, or we're naming the states that we have payroll on that policy. So it's not just an Illinois policy, and then you have an employee in Minnesota. And then you go, oh my gosh, we don't have coverage for Minnesota.
Yeah, and something else to note in a workers' comp policy that's different than all the other insurance I have is there's an audit at the end of the year.
Yeah, that's true.
Different than what you might think of an audit, where depending on the company size, you're just providing proof of what payroll was made. I mean, this isn't. At least at our size, there's not like a in-person audit or anything where we're an accounting audit, but it's you submit, because you tell them, I think my payroll will be X for the upcoming year. You pay your premium based on that estimate essentially, but then they go back and actually check what was paid. Because if you paid a lot more in payroll, then you weren't paying enough for insurance. Yep.
Yeah. That's how a workers' comp policy works this way for every carrier, by the way, and for across the country, it's an estimate based on the payrolls you provide. But like we know, payrolls, they could go up, they could go down, losing employees, adding employees as you grow during the year. So there's an audit at the end of the year, as you mentioned. And then on smaller companies, and especially with COVID years now, they're not sending a lot of auditors out, but you're kind of self-filling out the forms. And then they ask for 940, 941, your tax records, which kind of show your payrolls to prove up what you're putting on the actual audit form itself. It's a pretty easy process, but everybody does it. But again, it cuts both ways, right? If your payroll's gone up, you're going to get an audit premium or a bill at the end of the policy period. If it's gone down, you haven't lost the money. Then you get that credit back, and you either apply it to the next policy period, or you can actually get that money back if we move carriers or what have you.
Yeah, whereas you get an actual refund.
Yeah. So exactly.
Nice. Well, great. What other things maybe a property owner would want to look at buying?
Yep. There's a couple things. So if you have property managers and or maintenance people and are kind of running around and using their personal vehicles, you also have what's a liability for that called hired and non-owned auto liability.
This would be only if they're your employees, or you're saying just even if you're using somebody who's more like a vendor, then
Yep.
really what you should do is check the vendor has this. I guess I can
Yeah,
answer
the
my own
vendor.
question, but-
Yeah,
okay.
exactly.
Yeah. So keep going. What would that cover? This
Yeah, so
auto
this
policy?
covers your liability. So Breneman Enterprises, whatever name we want to use, you have employees are running around. Their personal auto policy, assuming they have it, that would cover, the primary loss itself.
Yeah.
But if it's something serious, an attorney's involved, and there's a family of four that something seriously happens to or something, they're going to go, hey, Tom, what were you doing while working for
Yeah.
Drew? Yeah, I was working for Drew. I was running around to buildings doing my job and what have you. And so then they could sue you for the liability for your employee. So that hired and owned auto liability covers your liability in the case of innocence excess of their primary, because typical personal lines policies give you 250 or 500 max
Of GL.
of liability. So if you have a serious accident, they're looking, the attorneys are looking for another pocket to put their hand in, if you know what I mean. So that's when they go after the employer and for their liability of it. And that's what covers you from that standpoint.
Right. So this is coverage for vehicle, for something that happens with someone who works for you, and you do not, as the employer, own the vehicle.
100%
Because if you own the vehicle, then you need to have your own insurance in the vehicle, and maybe you could rope that in with your excess policy too.
It would be right.
Okay.
So that would be what you talked about, more underlying on your excess policy. So definitely, if you had your own commercial auto policy, if you own vehicles in the name of Breneman Enterprises, then those would be insured on a commercial auto policy with $1 million liability, with the excess sitting over that.
Yeah. Okay. Nice. Makes sense. Yep. So then anything else? I guess one thing I'll ask about is we haven't bought any buildings that needed this, but we almost did flood insurance. So tell me about that.
Yep. Flood insurance has become kind of a bigger topic. A lot of lenders are now checking that when it was never done in the past. And the flood lines, due to a lot of things changing, have changed. So buildings that may have not been in a flood zone before, maybe now. So
interesting.
It's something to check. And so there's two ways to get flood insurance: the NFIP, the National Flood Insurance Program, or there's private market now that, as the flood issue has continued to grow, the private market has kind of stepped in. And if you can get a private risk, it's typically much more cost effective than the national program.
Okay, interesting.
From a rate standpoint, but there's different classifications, and I won't get too far in the weeds here as far as what type of flood zone you're in, A, X, B, whatever, and so the rates differ on that, and whether you really need flood insurance or not. We're all in a certain flood zone, but you could be in the 500-year flood zone versus a much more severe one. So something we check and look at. A lot of the systems now will tell you if you're in a flood zone, and when we're rating something. And so that's something to consider, as well as, like I said, a lot of lenders will let you know that too, because a lot of them are also running that too and saying, hey, by the way, you need flood.
So flood insurance, a national program, that's you're buying that through the government?
Correct.
And then the rest is just normal
private
companies.
Market carriers, Lloyd's or what have you, other carriers that are now offering that. And again, it's typically more cost effective if you can get it. It's not always available. It just depends on the risk and where it is and that sort of thing.
Nice. Okay, great. What else?
Yeah, I think the last item, which is kind of under what we're going to call basic insurance for a property manager or a building owner, is what we call professional liability or errors and omissions type coverage with tenant discrimination. That's kind of an important part of it. It's becoming a bigger issue on the tenant discrimination, and some policies are having a sublimit. So if you have $1 million E&O policy, errors and omissions policy, they'll sublimit sometimes the tenant discrimination these days.
Interesting.
Because somebody might give you 250 or 500 on the tenant discrimination.
Yeah.
And it's for obvious things. If you're discriminating a tenant by age, sex, race, or what have you, when renting an apartment, and you get sued for it, this would cover, again, that liability or that exposure as a risk as a building owner for doing that.
Yeah, because if you're, in some states, if you have a real estate license, you're required to have this, or this, if you're running like a property management company, would be like basic. All your clients would be asking, do you have E&O?
Yeah. In Illinois, about 3 years ago, became a requirement to have E&O as a property manager. When you get licensed as a property manager, I myself, as a insurance broker, have required to have E&O. realtors are, lawyers,
Right.
kind of people that are giving professional advice, if you will, or doing something where you can, I say, monetary harm somebody to distinguish that liability from general liability being bodily injury or property damage. I caused you monetary damage somehow by not
Right.
renting, by discriminating against you, and that's where this policy would come into place.
Right. So then as a building owner, if you want to get coverage for something like that happening, you can buy an E&O policy.
Correct.
Just even if you're not a licensed broker or salesperson, whatever term it is in your state, realtor, or licensed property manager, you could still buy the policy, and then you just would want to make sure that would be included coverage.
Yeah, for sure, because you could still get sued as not doing third-party property management or just owning 3 buildings of your own, or even one.
Because a normal property policy or excess liability umbrella that would not cover this then, or
it's an exclusion in the standard policy. Any kind of errors and omissions or tenant discrimination is a standard exclusion in the policy.
Okay, yeah, so that's good to know then.
Yeah,
so
yeah, for sure.
Obviously, that makes a lot of sense. And maybe let's jump into then. Let's talk about the process of, let's say you're buying a building. Let's go through the insurance process and touch on also maybe what do you recommend for finding an agent to work with.
Yeah, well, did you want to just flash up my name and number, and that's all they really need to know?
Panos on the screen here, and then we'll be good.
And then no, I think it's a valid question. I think there's a few sources. Talking to people that somebody like yourself that's in the business, that could be a referral, or attorneys, lenders, mortgage brokers, those kind of people all have connections. I get a lot of referrals from all those people, from clients to come to me that, and you just want to find somebody who, hey, you can work with, that works in real estate every day and knows the ins and outs of some of these coverages that we talked about, because believe it or not every agent does.
Right.
And we specialize, about 75% of what we do is commercial real estate. So if you live it every day, you kind of should understand it.
Right. And because I would say, there's a number of agents where they could say, I can sell you the policy, but also one thing too, I guess, to start is, if the agent works for an insurance company, then they're just only able to provide that one company's policy, which that is normal to buy that. Let's say you have just a home and a car to insure.
Sure.
That's fine. Like that's what, my parents had. And actually that's what I started out with, where I went to just the same companies that run commercials all through the football season and basketball, on TV.
Right.
But then once you get to like a 2-unit property, you start to feel like, well, now I'm getting beyond what these companies are offering. And so to me, what I would say on that is you can just ask these agents, what are you mostly doing for business? Because if, it's interesting for you, you don't do any personal lines of insurance
at all.
So then that's like an obvious telltale sign, like, well, this person is doing, commercial policies. And then what you say 75% of your business is real estate, then that's the kind of thing you want to be looking to hear.
Exactly. That's what you'd want to hear. But I'm curious, what do you, obviously we started working together, and we kind of hit it off, and we do that, but what do you look for? What do you see in an insurance guy that you like to see or help?
Yeah, I think one thing that I think how we got to you in part, where other people were using your company and using you, that I had talked to this other owners.
Okay.
And then it's and we should get into the quoting process next, but where it's not that easy to compare quotes, or you can dive in more on why, but you actually can't, only one agent can get a quote from a carrier. So let's say you went to Travelers, and I wanted to switch from you, and I talked to this other agent. When he calls Travelers, they'll say, we already quoted this, we're not going to quote it again.
Correct.
So it's hard to shop carriers, or shop agents, so really the only way to do that would be, you have to have like a new building basically, and then you could do it as a trial and see. But then if you don't like the new person, then you're making it a lot harder for your current agent, and then they'll find out you're shopping too, which that's fine. But like that, so that's one thing that I guess to point out that makes it where it's not as easy as some things where you just like with loans, you could get as many quotes as you want.
Perfect,
I've never heard of anyone saying, well, we already, I think they would tell the person we already quoted this, but like, we'll like on like the debt front, like, but
Yeah,
we'll still quote it.
still
Like
do
that's
it.
fine. There's not this rule that has been, yeah, I think unique to insurance.
Yeah, that's a good point. It is definitely that way. So when you come to me with the information, which we'll talk about when we go to get quotes at that carrier, there's something called blocking. So once I've put in a submission on your behalf, then they won't quote another agent for that particular piece of business.
What's
And
the
that's
reason for that? Would you say? What would they say?
they just carriers don't like that. I think it gets kind of messy, and then because I may be dealing with one underwriter, and XYZ
Yeah.
company's dealing with another underwriter, so then that underwriter do them a favor or get them a different price, and so now Travelers has two different
Oh.
prices out in the marketplace, so it kind of muddies the water for them.
Interesting. Okay. I thought you were going to say it's a waste of time in their mind, but actually
Yeah.
now it's they could have done checked the one different box, or the coverage limits are different or something, and now it looks
Exactly.
like you're quoting different prices to people. and stuff.
Exactly. And,
Interesting.
and we've had that when people have gone in and used maybe a different named insured, and we have two quotes, and now,
Oh, really?
now it really muddies the waters, and
Oh.
it gets kind of so that's why they do it. And so that's kind of, we go back to why you work with your current agent. Does he have access to all these markets, or does he have access to one market? So what we pride ourselves on is having access to a bunch of different carriers. So whatever market you go to, I can bring out, like golfing, I can bring out the right golf club. Am I
Yeah.
driving? Am I putting? What am I doing in that particular marketplace? You know what I mean? So we have that, right? So we have a breadth of carriers that we can go to that fits, because every carrier has its own appetite. What we talk
Yeah.
about, what they like. Does it fit in their little box? I always say. Is it frame? Is it, JM, joisted masonry construction? Is it masonry non-combustible? Is it sprinklered? Is it in a high crime area, a low crime area? Is it in a high catastrophe area? So all these things factor into what carrier, what club we
Yeah.
use, kind of thing. And that's why it's important to pick somebody that that has that ability to bring you different things depending
Yeah.
on that. Because like you said, at some point you're going to be blocked by that person going to. So if you don't think they're doing a good job for you, or know what they're doing, or don't have that ability, then maybe you're
Right.
with the wrong person.
Yeah, and how we really started going was we had some older buildings here in Chicago, and then you had a really competitive quote on that, where it was the price, where that was one on price primarily, because you had access to a different, I think you call it market, but just where, to me, it's just a different company
Carrier.
that
Yep.
not everybody else was quoting, and then you had some special deal with them, basically, where they have something worked out for these older buildings.
Yep.
And it was great, and I think we're still with that same company on those buildings, where it's been no one's
are,
yeah
right.
no one's beat it. And then two, one thing that you guys have done a good job, so I'd encourage people to look for this too, where you make it easy to get the quotes, where I've gotten other quotes before, and you say, okay, we're buying this building, and it's, here's the address, and then here's maybe the broker book or some like basic info on it.
Right.
And then the agent sends you back like a spreadsheet to fill out with like 100 things on it. Or they're emailing you a checklist, and they're asking you like, what's your tax ID for this LLC? And you're like, well, we just put the building under contract. Like we don't have the LLC open. Why would we have a tax ID? And like, so that kind of stuff. So I guess if someone sends me like that request, like what's your EIN, what's your tax ID now?
Yeah.
Like, I feel like they're not experienced, although some of those people that were like 10 years experience, so they were experienced. So they just, you make it easy for some reason, or what, if you have some philosophy on that, but that's been,
Yeah, I actually do, because before insurance, I was in a different business, and so I bought insurance for like an 80-person company. So we were heavy in the weeds with insurance, and I try to make it in, I've been on that side, so I want from this side to make it as easy as possible. We will eventually get that information, but if it's not pertinent to me getting the quote right up front, I don't ask for it.
yeah.
We're going to do it properly. We're still going to get all the proper information and insure you properly.
Or I feel like you look it up too, where like half the things on this spreadsheet I was sent, it was like, this is just all out on the internet. Anyone who's going to go to the building, the city website or the assessor website, they could have all this info
Again, experience, you
themselves.
said it. Yeah, experience. We look it up. I know where I have those resources. I know how to go online. I can measure a building. I can tell you approximately pretty close to the square footage. Just
Right.
experience, because I do it every day. So I know where to go like you said, the assessor's office, other tools that we have in the office where we know where to go to get the info. So I don't have to ask you again 100 questions just to get going on that, of course.
Right. Because some of this where it's a lot of work where, I mean, if we, if you own like 30 buildings, like this, filling this, spreadsheet out, it's a lot of work.
Of course.
So then, and we're plenty busy with other stuff. So then that someone's filling out that info, and it's never been us with you guys. So
yeah, no, we do that, like you said, and we take it upon ourselves. But some people, I don't know, I don't want to call it lazy, but they just figure, I fill this out and I'll do it, or I won't, kind of thing, where we take a different approach. So
yeah. And that, no, it's where, or maybe they don't have the staff or something, but
Sure.
I think it was more like a philosophy thing. Like I'll send me all the info and then I'll get a quote.
Right.
Whereas, I mean, for you, we're usually just telling you like the address, and I mean, I know what to tell you that's important, like there's this, this like issue to look at that you'll need to make sure the carrier is fine with, or we're going to, it has this kind of like electrical, but we're going to switch it, so, but, but then, so in terms of, so what, I would say I'm looking for where, it was access to different products, and then that helps with getting the lowest rate, and then making the process easy, and really like you understand that, and then you understand how things really work too, where so like you can explain it well to me, where
Sure.
There's so much lingo in this, or even you're explaining this in a much more simple way than the regular insurance agent, but there's still not that easy to follow if this is the first time you're hearing about insurance. So most on the podcast, this is probably, a lot of this sounds confusing, but from someone who just does insurance their whole career, it would sound way more confusing from like another agent too.
Right. Well, that's good. I try to make it simple, and I've had enough employees or new people that I've hired and had to train too, and you kind of either know how to do that or not, and as far to explain it, then I always try to give them examples, because that's, I think, how people learn, in my mind.
You're right.
So, and that's what I try to do. So.
Which, like the ordinance thing, I didn't feel like I had a good grasp of that, to be honest, till the sprinklers example. Not today, I've heard that before. But that makes perfect sense, where then, because it doesn't have to do necessarily with the building's age necessarily. A city could say, all right, all the new buildings are sprinkled starting today. And your building could have been 2 years old without sprinklers, and now it needs sprinklers.
Correct.
So I like that example, because that's like a law that
could change. We are seeing a lot of municipalities do that. Over a certain number of floors or something, we're seeing that coming in a lot.
So then maybe that's how you would find a good agent. I would, in terms of where to go, I think too, especially how we found you, and I don't know if in every market it's like this, but at least in Chicago, I know so many different owners. So I didn't ask any lenders, brokers, or anybody. It was all just owners, where just other owners I knew.
Sure.
So I'd encourage, if you know that, because then they know the actual experience, where the person who referred me to you, they were using you and were having a good experience. So that, because sometimes if you get in a referral, a referral is better than no referral, but if you can get it from an actual like customer, that's going to be better, I would say.
Agreed.
That's why I wanted to just chime in on that, because sometimes if you get it from a broker or attorney or somebody, maybe they're not actually buying any insurance to you, they've just heard good things, but then like another property owner, they're experiencing what it's actually like. So then that's why it was easy for us to get started, because it already seemed like most people I talked to were already buying insurance for you
from
guys.
us, and happy anyway. So.
So then that okay, so then let's just pick it back up, where property, you want to buy a property.
Sure.
So I would say, try to get some of the homework done on who you would use for your agent up front, talking to people like we already discussed, because once you have a deal to buy, what I would say is you want to get some sort of pricing indication pretty quick on what it'll be, because you're running your numbers, whatever that means on your deal. Maybe it's just on a piece of paper like I started out with, and they but you want to know, like, if your insurance number is good.
Sure.
And then if you're scrambling to find vendors, and this goes for attorneys and everybody, like, you want to have your people lined up ahead of time. So let's say now we've done that. I found somebody who they specialize in, insurance for, real estate or commercial stuff. It's not just the home and auto person. What do you do then? So a deal comes in.
Yeah, so I think that's talk to that person, introduce yourself, and just have a conversation on, you'll get the understanding if they understand the market, and then, depending on how many deals you're looking at, we'll provide like indications, right? We don't want to obviously, do 100 a year when you're going to close on 2 properties. So we ask that obviously you're a little bit closer to knowing you're going to buy that and stuff. But if you see an insurance number that looks crazy low or crazy high, with our experience, I know rates pretty well. Based on construction and just kind of doing a pretty quick calculation, we can give out what's called an indication, what we believe the premium will be. And we'll probably shoot a little bit higher than normal. I think many of the indications I've given you, we always come in under that, but I'd rather do that than have you surprised at the end of the deal.
Yeah, and you're talking about, let's say you're not under a purchase contract yet,
right.
but I'm looking at this deal going, how is their insurance so high?
Right.
And then that's when to talk to the agent before you have it under contract.
Correct.
Otherwise, if the insurance, let's say, looks kind of normal, then I would say you should wait to have it under contract.
Yeah, exactly.
Because then you're just asking for quotes.
Yep.
Right?
And then at that point, so that's when we'll get the information. Again, I'm not going to send you 12 pages that I need you to fill out. We'll ask for the offering memorandum, which gives us a lot of information. Sometimes I'll just ask for an address and then go gather a bunch of information and then come up with any other questions I have. There's a plethora of information available online, so I can find a lot of it based on, again, doing this every day. And so that's what we'll first do, is get the information on the property. How many units, how many buildings, how many stories, construction. Sometimes construction is hard to look at from the outside of the building.
Yeah,
so
construction type.
Yeah, construction type. So is it joisted masonry? Is it frame? Is it the new type podium or pedestal type construction where the first floor is just masonry and everything else is, stick built above it? Because that affects rates. So when I give you that indication or when we go into market, I have to tell them what the construction of that particular property is. So again, a lot of that is found in a lot of the O&Ms. They'll talk about construction, or this is, wood framed or concrete block or what have you. So we'll find a lot there. So that's the first thing, is we have to, get all the property information. Hopefully you have an agent who's kind of self-sufficient, can get most of that information. And then we go out to, I call it market, to the carriers, depending on, again, what club we want to use. I know older joisted masonry in Chicago, these are my carriers that have the best rates from experience. Frame in Phoenix, low rise kind of thing. These are the carriers that, have good rates just from experience, or reaching out to one of our offices. If you go to Tuscaloosa and I don't have experience there, we have somebody I can talk to and go, hey, what are the rates doing down there, kind of thing, and what carriers are working down there. So we'll go out to those, whatever, 3, 4, 5, 7 carriers, whatever it is, trying to get, the best pricing and terms. We determine, again, the replacement cost, which we talked about earlier. So we'll go online and run a calculation on that, so we have a good idea of what that replacement cost would be. And that's what we'll base our quotas on. And so that's all interesting, but also then we want to ask for lender requirements, because they've become much more stringent as of late as to what lenders want. They're much more involved, and especially if you're doing a Freddie Fannie one, forget about it. That's, that's going to really have some stringent requirements. But we always ask for those, because again, we could be quoting to something, they may want us to include something that you don't have. Certain ordinance limits or what have you. Some are setting higher requirements nowadays, or what have you. Or they want, if you have more than X number of stories, we want this excess or umbrella limit. So it's kind of, it varies. So we'd rather ask that information up front. And this way we're quoting to the right limits, so there's no surprises at the end of the day when, now you're going to close and you go, oh my gosh, we need an umbrella. And now it's an 11th hour fire drill, which we want to avoid.
But it's actually easy to get, to satisfy the insurance requirements for Fannie and Freddie, because it's just, here's what it is, do it.
Yeah, we know what those are, right? Then, when you've done it before, we know exactly what that is.
But also it's, in your appraisal for those, they tell you the insurable value. So it's just, all right, here's the number. It's not, we can run our own replacement costs for fun, but they don't care. Here's the number.
And they have very stringent requirements, and we know what those are because we do plenty of those. And so we know what that is. But like the other lenders don't have that, or sometimes they have different requirements. And that's another thing that we do, is then we provide, once we've gone to the carriers and we know the coverages that they're required, we'll provide sample certificates to the lender. So that's why we try to get into the process early. So we'll send them a certificate. It'll have like a sample written on it kind of thing. And they look at that and go, hey, these are all the coverages. This is adequate, or we need you to change this or change this wording, whatever. So again, this is all being worked out, not an 11th hour fire drill. I don't like fire drills.
Right.
I like to get it done ahead of time. And so they've approved it. So once you're ready to close, we're good to go. We're issuing the policy. We're sending those certs now as final certificates, and we've done, our portion of it, made it again easier for you as an owner trying to acquire that property, not having any headaches at the last hour or changing a premium, right? Because if at the last hour we go, oh my gosh, you need a $5 million umbrella, you haven't factored that into your cost, and now you're adding that's a big difference for you.
Right, of course.
That changes your numbers.
Yeah, or I didn't know on the Fannie one I needed ordinance or terrorism coverage or any of,
Right.
What about then, what would you, and maybe I'll just say it instead of asking it as a question, but I would say depending on the lender, there is some flexibility. So let's say a lot of banks, let's say they just ask for the whole loan amount to be like the policy limit. But like we already talked about, the policy doesn't necessarily work like that. If you have a building that costs $3 million to rebuild and a $4 million loan on it, it's being valued based on the income. And also the land is worth something. Exactly. So again, that's why the replacement cost doesn't tie out to the building value. But like a lot of times you can coach them and explain, this is fine. You want this $4 million coverage, but we ran this replacement cost every which different way. It's coming out to like $2 million. There's not a scenario where it's going to pay out for. Why don't we buy $3 million instead and stop wasting money? And depends on the lender. I feel like the Freddie and Fannie appraisals, when they have the value, they're usually less than the loan amount, or it's just independent of that, I should say. So it's not just a kind of, okay, we just want the loan amount. It's actually based on something that the appraiser's calculating. And it seems like they're using kind of similar sort of software.
That's what they tell me. They're running the Marshall Swiftblock or the CoreLogic, a replacement cost estimator, and we see those pretty good. They're on the low side sometimes, which is okay, but we're still not going to use that number necessarily because I don't want you to be underinsured, and they're not flexible on that. The number is a number, whatever they come up with or more is what they want, where we can negotiate. We have been successful on some deals working with the lenders on either building limits or ordinance limits. Sometimes they want really hard. So you got a $40 million structure, and now you want 10% of B and C. You want $4 million of each B and C. That gets really, really expensive. So you really need $4 million for those kind of losses, an ordinance type loss. It's not always linear as a percentage. So then we can go back, and we have on a lot of them gone back to the lender and negotiated and had that conversation with them because we're knowledgeable about it and been able to win that and get it down to $1 million or something, which makes some sense and can save you dollars and still have you properly protected.
Right. Yeah. So I just want to point that out, where with some, we said with Fannie and Freddie, it's not flexible, but with some it is.
It is.
With providing them information and some, we'll call it like coaching on how this would actually work, where we're just sort of wasting money in my example with coverage where would never actually receive anything for.
Right.
So
exactly.
Okay, nice. Yeah. So then that's the process. So you want to get it started early, with finding the right person and then getting your information in on the building once you get, it under contract.
Sure.
Get your lender requirements over to them right away once you know the lender.
Yep.
Okay, nice. And then from there,
then we kind of go to work, and we might have some questions for you. If we see something questionable on it, we'll, maybe have some questions, because there are some red flags out there that people should also look for when they're looking at a building that carriers don't like or are a problem.
Oh, interesting. Yep.
And, a couple of them, we've talked a little bit about these, are electrical. Electrical is becoming a big issue, especially buildings in the 70s, if you will. They have like stab locks.
Which that's like a type of panel of the company.
Yeah, it's a type of panel, or Zinsko is another name for them. And they're a type of circuit breaker that kind of that runs hot, and you have issues with fire and so forth. And so a lot of carriers won't write that kind of electrical system in a building. So you got to be cognizant of that. Because it limits your market. So when we're limiting what carriers we can go to, it's also increasing your premium. If I only have one carrier will do it, we're kind of tied to that one carrier that will do it. Or if you have aluminum wiring, we see schedules. One of the colleagues in the office is working on a large schedule out of Ohio, and they have a ton of aluminum wiring. Well, again, that's pretty much a red flag for a lot of carriers.
Right.
We have one carrier that will write it. We have it done cost effectively, but it's really, a tough go for those kind of things. So there's certain things that they don't like. The other thing we're seeing now is everybody, the underwriting is becoming much more sophisticated from an underwriting standpoint. There's a lot of data that they're buying. I mean, we have carriers that fly drones out that look at roofs, can tell you the condition of the roof and how old it is and so forth. So they're using a lot of that. They can tell you crime scores. And so they're basing a lot of their rates or depending on what the crime score is in a particular area. They can tell you down to the block how many fires have been on that block or how many losses have been on that block. They can tell you just you name it, whatever property information that's out there, they have access and data to all this. And so it's before that wasn't available to all the carriers. And so they're using a lot of this information. And sometimes this helps us and sometimes it doesn't help us, of course. So
interesting. Yeah. That I know things have changed a lot this year, in terms of just with insurance. Just I know that rates are up on certain policies, and
sure.
That's interesting. I hadn't heard about how much more data and technology they're using for quoting it.
Yeah,
that's interesting.
I have one carrier that quotes condo associations, and are notorious for having 12 buildings, 300 units, and lots of roofs. And condo associations are kind of self-funded, right? So the roofs aren't necessarily done in a timely manner, if you will. I'm putting it nicely. So, but they have this data that, and it must be a provider. I don't know who provides it to them, but they'll tell us basically how old that roof is, and they base their rates on that kind of thing. So it's gotten pretty advanced. That wasn't happening 5 years ago. That was not something that they had data available for that. But a lot of this, what we call InsurTech, has been coming up into the market, and they're able to get so much more data. So, I mean, they'll tell us about tenants in a building or whatever, or what about this or that, or they have access to code violations. So that's another one we start seeing where they go, hey, we're quoting this building. What about these 12 code violations we found?
Wow.
Have they been taken care of, kind of thing, before they close, or are they going to take care of them in the first 60 days after they close? So there's a lot more information out there on buildings, electronic data. So.
Nice. Well, that should bring the prices down now that they can quote the risk so accurately, right? That's
you would think. Unfortunately, that's we're not seeing that in today's marketplace.
Yeah. Well, cool. Yeah. Let's close then with just kind of what's maybe just with, let's say someone's been listening to this. They already, maybe a few of these things were new, but let's say what's happening this year, kind of like new topics or what's going on with rates.
Yeah. I think that's a valid question. During the last couple of years, we've really seen some pretty high rate increases on property. I think the data shows us that 4 of the last 5 years, there have been in the U.S. over $100 billion worth of losses.
With a B, right?
With a B, yeah, $100 billion, which is obviously a lot. And so we're not seeing rates dropping. We're in what we call kind of hard market, which means that, the supply is not keeping up with demand. So we're still seeing increasing rates, and much more what I was talking about, underwriting scrutiny, depending on where you are. Is it a cat type, risk?
Define the cat.
I'm sorry, catastrophic type risk. So is there wind or hail? Then they have all kinds of data on hail. So Colorado, try buying insurance without a higher wind hail deductible. Does not exist with any carrier. So
interesting.
So you might have a $5,000 property deductible, which we talked about earlier, but wind hail, they may have a $25,000 or a $50,000 or $100,000 deductible, depending on the size of the roof and the building itself.
Yeah, I know. I think it was something we were looking at in Texas. It's a percentage.
Yep.
So tell us about that.
Exactly. Yeah. So that's how that works. So in Texas is another good example, Florida, of course, and Colorado, when there's a lot of catastrophic type losses for wind because of the storms that have happened. They won't offer the standard property deductible. They give you a separate deductible for wind or hail. So, and that it varies by carrier. It can go anywhere from 1% to 5% or a fixed number. $25,000, $100,000. So if you have a wind or a hail loss, that deductible is going to apply, not the standard $5,000 deductible.
But 5% though of what?
Of the building limit.
Right. So it's really high. I wanted to make sure that was clear. Not of the loss amount. Just
No.
This could be
Of the limits.
right. You have a $1 million apartment building, and if it's for what you're talking about, your deductible is $50,000.
Correct.
That's a huge deductible.
That's
And
correct. Yeah.
Imagine that on a $20 million building.
Exactly.
Right? It's
Yeah.
real
And that's
money.
where
Or
it doesn't
basically-
become a percentage, right? That's when we might go to $50,000 or $100,000 deductible. It's still going to be a
Yeah.
high number because, again, they're trying to protect themselves from these huge losses that they're taking. But so that's becoming an issue. We're actually, if we're talking just Chicagoland, some of the carriers are trying to bring that into this marketplace because we're seeing more hail losses here, and we're kind of fighting it.
Yeah.
And able to hold it off for now, but we see it creeping in a lot more marketplaces because of all that hail data they have and all the information they have and what they can predict as far as hail losses.
Yeah. Interesting. They
So,
should be more worried about the glass breaking.
right.
On the stores. than,
Right.
maybe the-
And then the other thing we talked about was excess. So that due to social inflation and what we call nuclear losses, which are more than 10 million, is growing tremendously. And so umbrellas have become very much scrutinized, much more than before. And the rates, 10, 15, 30% increases we're seeing on umbrellas if you can get it.
Like year over year.
Yeah. Yeah. So we're seeing some huge increases on those because of the capacity there and these nuclear losses. The carriers are really pulling back and really scrutinizing, where before I could go, hey, add these 5 properties on the umbrella.
They wouldn't even ask.
Now they
question
come
almost,
back with
yeah.
30 questions on each location and they have access to data on who the tenants are or that sort of thing. And then they go, well, boy, that's a tire store. We may not want to add that location on because it's a higher risk than having a CPA office in that.
Yeah.
Thing.
But then what's driving these increases? I mean, originally I was, it just what popped in my head was a COVID related thing, but not a lot of claims actually got paid out on that.
No, it's really just lawsuits, large lawsuits and losses that are being paid out on the umbrella. Because again, that first million is on a standard policy, but the excess. So now you have 10 million, 15, $50 million claims that are being paid out and going into the umbrellas. And that's why they're becoming so high. So it's a capacity reinsurance issue, which I won't try to get too far into the weeds on it, but it's just, what they have available. It's, it's like anything else in the marketplace, kind of supply and demand. So.
Yeah. You don't want to do a reinsurance part now.
We'll keep that for the next session. So.
No, I'm just kidding. But that is how Berkshire Hathaway makes a ton of money. Check it out on your own time maybe. But cool. Yeah, that well, interesting. So then you also, with the umbrellas, you said if you can get it, like what sort of companies or properties are there basically no umbrellas for right now then?
They're hard to get for certain properties with high crime scores. Because again, this has nothing to do with the property size, so we don't care about wind or hail or catastrophe. We care more about, liability. So high, what we call high hazard risks. So again, if it's a plastics manufacturer and you have a bunch of plastic inside a building, well, if you have a fire there, you're gonna have a big loss. Because that's gonna go. So it's hard to get the umbrella for those kind of risks. So it depends on the underlying hazard, which we talked about.
Got it. Okay.
Apartment buildings, and this is kind of what we're geared towards. Rates are up. They're a little bit harder to get because the capacity is down, but we can normally get an umbrella, for a building, unless it's in a really, 100 crime score type area. Then we might have some issues trying to get it. We'll get it. It'll be a much higher rate, of course.
It's interesting on the crime piece because on some of this where I actually would just, without having any info, think these high claims, it's maybe not a crime related thing. It's someone who was a really high income potential person got hurt. Back when I was doing student housing, the example from my property manager carrier then was just imagine like 2 medical students, slipping and falling, the full career of, doctor wages in front of them. Yeah. You think that $2 million billing limit's enough, and then that's, those people make that in each in a decade, and they're the whole career wiped out.
Yeah, it's an interesting question. So, I don't know. I don't do the underwriting, so I don't, run all the tables and stuff. I leave that for the techie guys,
Yeah.
and the carriers do that. That's kind of just what we experience from them, kind of thing. But yeah, I agree with you. But I don't know how their data pans out, how the crime score directly relates to that. That's just kind of been our experience.
Yeah.
So.
Well, it makes sense. And maybe if the properties aren't as in good a condition or something, it's not on the property, but that could lead to more just,
more slip and
liability
falls if it's
issues
not being, done properly and stuff. So,
nice. Yeah. Anything else?
Just a couple items, and the ransomware, cyber liability is a big issue. Not so much for building owners unless you're, a property manager, even a third property manager, and you have computer systems and people's personal information, something you want to talk about. We see it every day in the news. We see, ransomware attacks, people taking over companies and keeping their data and so forth. So a robust cyber policy, if you have that kind of exposure, talk to your agent about it. Those rates are exploding also because of the plethora of losses that they've had and
Right.
that is going on out there. But just something to consider, keep in mind if you have that kind of, and if somebody took over your system, you couldn't run your business.
Right. It's very valuable.
Very valuable, something you want to think about.
Right. Yeah. And I can see why those premiums would be a lot. There's a huge loss potential. So some of these companies, they're holding millions of dollars and then they lose.
Yeah, we've had insurance companies, not ours, but other even carriers or other agencies, large ones that they've locked up their data and it really costs them millions and millions and millions of dollars to get it back, the ransomware. And it's
in terms of basically just a payment to the whoever locked it up.
Yeah.
Wow.
And then you never hear exactly what they paid out. You kind of hear, but you don't hear. It happened in one of was it a gas or a provider down in the South where they did that and they took over their system. So this is, again, it's becoming more and more of an issue. So just something to be aware of as you're, thinking about your exposures and talking to your agent about that. That's another issue to talk about.
Yeah, makes sense. Well, nice. What about, so then I guess really we haven't even, I feel like, felt like so today there feels like there's obviously more inflation than a lot of periods of time. Yeah. But even what you're talking about isn't even inflation. This is more just the risks on certain things are way up. I mean, the umbrella thing, that made a lot of sense. And this, I mean, when you just think off the top of your head, all the big things that have happened, like with everything in Texas freezing and all the hail and, the wildfires in California, like it's easy to just think like, yeah, there's been a lot.
Yeah. And then you look at the Vegas, the shooting at that country concert where all those people were, either killed or injured and what have you. That's a huge lawsuit, happening there as far as,
Interesting.
So those kind of things are going on, of course. And so that's, again, why the losses lead to that. You mentioned inflation. I'll talk to that for a second. So we're seeing a lot of inflation today, in the fourth quarter, first quarter, we're seeing some high jumps. And so we're going to see some in premiums if that continues to rise, because inflation is a factor that's factored into premiums when they're doing their calculations on what the adequate rate is. Inflation is one of the things, because if we expect X amount of losses, if it costs X amount to replace that building, for example, but now that it costs so much more if we're going to have X amount of losses, they're factoring that in. So that'll increase rates also if that's something that holds on long term.
Really
so
more in the building.
To be determined from a property standpoint to see if it holds on long term, then we'll start seeing some of those increases due to that large inflation. So.
Yeah, makes sense. Great. Well, yeah, let's leave it there. I mean, thanks for being on, Tom. I mean, great job. I think we'll definitely should have you back. We should do like a year-end kind of what happened this year, maybe in insurance. And then I got questions I didn't really get into, but maybe more in the details thing. Like you mentioned the Zinsco or stab block panels. We can talk about what to do when you run into those, or just other more deep in the weeds stuff for like a, round 2 of this.
Sure. So. We'll do insurance 201 on the next one. I enjoyed it. Thank you for having me. It was a great time. Thanks.
Great. Yeah. How can people watching or listening get in touch with you if they want to,
either email or phone. My phone number is 847-940-4228 or tom.panos@rosenthalbros.com, or just call Drew and he'll be happy to share my info. So.
Perfect. Yeah, we'll put that in the show notes and on the screen too, and on the video.
Perfect.
Great. Well, yeah, thanks for being on. Nice episode.
Great. Thanks for having me. I appreciate it.
Until next time, everyone, Thanks for joining us, and we'll see you on the next episode. Thanks for joining us on the Rise and Invest podcast. Please be sure to hit that subscribe button on YouTube or wherever you enjoy your podcasts. If you'd like to dive even deeper into real estate investing, check out our company's website, riseinvest.com, where we have numerous free resources and information that can help both active and passive real estate investors. Our 100-plus page passive investing guidebook, our trends report, and our blog are all available on our website. If you are an accredited investor, you can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording and do not purport to reflect the views or opinions of Rise Invest Holdings, LLC and its subsidiaries. The views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities, and the speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.